Hello and welcome back to The Note, still coming to you from our glorious new offices in New York. Today, let's talk about China. As the booming Shanghai skyline shows, an area where there was nothing at all some 20 years ago, China has grown very fast, very quickly. That leads to great fears that a slowdown is coming. How much should we be worried about China? With me now to discuss this is one of the FT's foremost experts on Asia, Henny Sender. Henny, thanks for joining me today. So let's start by taking a look at import growth in China. You can see the obvious dip during the crisis, then the great recovery. Now it's plainly slowing down. Should we be worried about this?
In a counterintuitive way, I would say maybe not. What China needs to do is focus on the quality of its economic growth rather than the quantity. So as it slows, one of the reasons I love this chart, John,
right, yes,
is that it reinforces the point that I believe to be a very important one, which is namely that any slowdown in China may be more of a problem for those who have exported to China than for China itself.
Okay, so it can get its act together. What about people who've lent to China? We hear a lot of concern about the credit bubble, obviously not necessarily in Pudong, but around China there are lots of large speculative buildings lying empty. What about people who've lent to it?
Those people may not be among the fortunate ones. I mean,
Right.
20 years ago, that skyline, as you point out, was just beginning to be built, and all the analysts were saying Pudong is going to be a white elephant. That was proved wrong.
Right.
But for every Pudong, there may be 20 white elephants now. You have to look at it in a more nuanced way. I think there will be white elephants. I think that some of the property is going to be fine. But what needs to happen is for housing to become affordable in China. So if the prices fall, that's good for China's people. It's less good for the banks. But when you have almost 4 trillion in reserves, you can do a lot to say these holes may be deep, but they're not unfillable.
Okay, so basically sticking to this pattern that this can actually work well for China, even if it doesn't work well for those relying on Chinese growth. Let's take a look
in the long term.
Let's take a look at the Chinese stock market. So despite, we've given you the emerging markets as a whole for a comparison there, and Chinese stocks have really done horribly post-crisis. They led that brief bounce back up after Lehman, but since then an inexorable drag downwards. Should we expect that to continue? What is going on there?
There has always been a disconnect between the macro, which has been so strong, and the micro. The fact is that the stock market is a government stock market. Who has the priority list? It's the state-owned enterprises. Should they be unhappy? Absolutely. One of the most exciting areas to me is the fact that you have IT internet companies who have suddenly come out of nowhere to really challenge these state-owned behemoths that have been the beneficiary of privileged access to credit from the banks and a listing on the stock market. Just to give you one little data point, if you look at the WeChat application of Tencent, it is responsible for China Mobile's SMS revenues to have dropped 80%. So do I think there's worse to come for China Mobile? Absolutely. But would I be happy to hold shares in some of these new internet companies that are marginalizing the dinosaurs? Absolutely.
So you would argue almost that there's a deliberate decision by the communists, by the ruling party, to allow a certain amount of creative destruction at this point, that they're prepared to accept new entrants and the steady decline of state-owned enterprises.
I think it's one of the more exciting developments in China that the authorities are acquiescing in the rise of these new companies, despite the fact that their beloved state-owned enterprises will be the victims of that trend.
But I suppose the final question is, in terms of victims, you're making it sound as though there aren't going to be too many domestic Chinese victims. There's still surely some reason to fear for those outside China who have money riding on Chinese growth, isn't there?
Absolutely. So I would be very uncomfortable, say, about the future of Indonesian resource companies, say an Indonesian coal company, which has prospered on the back of demand from China, which may no longer be there going forward.
Okay, Henny, thank you very much indeed. I hope that helps put things in perspective. Yes, we do need to be worried about China, but when I say we, I mean perhaps more we in the West than those in China. That at least is one quite promising analysis.